Good morning, ladies and gentlemen, and thank you so much for coming to the Hot Chili presentation on the final day of the Rural Investment Symposium. To those of you online, welcome. We like to start on time, especially for those people who are watching us from all around the world. My name is Kerry Stevenson. I am the host of Making Money Matter and the founder of the Australian Gold Conference. Today we are going to hear from the Managing Director and CEO of Hot Chili. He is a geologist and a mineral economist with over 25 years experience in the industry. He doesn't look it, does he? He needs to stand up because, seriously, you look far too young to be 25 years in the industry. And they've got, it's really interesting that it's a copper company in, obviously, Chile. And he's going to tell us all about it. We're going to have some time for Q&A at the end, but please give a very warm welcome to Mr. Christian Easterday from Hot Chili to tell us the story.
Well, great to be here this morning, and hopefully everyone's feeling nice and refreshed after last night. We're getting towards the end of the conference, so really appreciate you all having the interest to come and hear the Hot Chili story one more time. I'm able to go into a little bit more detail today. I'll take you through our recent presentation deck, which is specifically starting to talk about a growing area of value for the company with our recent announcement of the establishment of Huasco Water and a dedicated water subsidiary for the company. We are talking about copper. I've been the founding director and managing director, CEO of Hot Chili since its inception. This has been a very, dedicated team that has driven Hot Chili's vision from the beginning, from our listing in 2010, a great discovery on the coastline of Chile, north of Santiago, and then a company that was able to survive, like not many of our peers, but survive an entire down cycle. And not just to survive, but to really reinvent the company, to dramatically lift the scale of this asset. That was done through the Costa Fuego addition in 2019 and a rapid resource build to be now sitting with a premier copper development at the right timing at the beginning of what is inevitably going to be a very, very different new copper bull cycle. So just talking on copper, I guess the real alarm bells started going off for Hot Chili in terms of the forward indicators that we were waiting to see for the revival of the copper price, and ultimately the things that the industry has been talking about for years, the fundamental issues on supply constraint for the copper sector that were always going to play out given basic demand underlying of 2.5% CAGR growth. And what we find ourselves in October was a refining and treatment industry that had dramatically expanded its capacity to produce new copper for the world. But as I've said in a few interviews, somebody forgot to tell the miners the floodgates of capital to invest into this copper sector, to discover the new mines of the future, to advance through very long permitting timeframes and what is now accepted as standard 17 to 21 year timeframes to bring a new large-scale copper deposit into production. Those timeframes, the declining head grade every year of 2.5% drop in head grade for the copper sector, all of these factors are now starting to collide into a market that effectively doubles in demand every 20 to 25 years. The current size of the copper market is around 25 million tonnes of fine copper. It's the second largest metal market in the world. And if one were to look for any direction in terms of what this next commodity cycle might look like for copper, you probably have to look back to the early 2000s to where another very large metal market, the iron ore sector, experienced similar conditions, but for slightly different reasons. That was a China boom. It was all about demand. What this next cycle for copper will be about is lack of supply. And so the things that occur at the beginning of a new cycle, depending on those fundamental issues, and in this case, it's really inelasticity of supply, the inability of the copper sector to react with new supply. That will be a significant feature of what is about to come, and short squeezes, heavy volatility at the beginning of this onset copper cycle will certainly play out, in my opinion, for the next 12 to 18 months. And then we'll probably start to move into a different environment, and that will be about scarcity, and that will be about securing supply for the off-takers and really for the downstream users of what is really one of the world's most critical metals. So add to the critical commodities that Hot Chili is in, we're in copper, and we're also in really a commodity that is the provider of life, and that is water, and we'll talk about that in a lot more detail this morning. So just as a recap, this is 14 years investment into the coastline of Chile, consolidating and deal making. We have done over 30 deals since myself and Jose Ignacio, Vice President in Chile, started consolidating this part of the coastline. We recognised an opportunity that there was no Tier 1 camp at this location along the coastline. And that is a fairly predictable thing that geologists like to do. In Chile, it's fairly well known that these large transverse faults that span the country's length, north to south, they space about every 150 kilometres up and down the coast, and they cross the two major mineralised trends. On the coastal range, it's the Atacama Fault Zone, and in the high Andes, it's the Western Fissure. Older deposits down on the coast, younger deposits in the Andes. Andes deposits are typically around 3,500 metres elevation or higher. That would probably account for about 80 to 85% of the deposits. And when you go down to the coastal range, looking at the older deposits, you really don't see as many high quality, large projects. What they lack in terms of multiple billions of tonnes, they gain in all of the capital and the operating cost advantages of being down on the coastline. You don't have 4-year timeframes to production. The experiences of the copper sector in the last cycle were mostly tainted by high Andean deposits, producing very large capital blowouts, 4-year construction timeframes, and indeed the guys over at Quebrada Blanca 2 can tell you that that is not alleviated into this cycle. So what we have is one of the largest copper projects at low altitude. The project is 1 billion tonnes now. We have 3.5 million tonnes of contained copper, 3 million ounces of gold in conventional deposits. These are open pit primarily in terms of how we will exploit them. Last year at this conference, we went through the economics of what this looks like at a very, very large scale of around 100,000 tonnes per annum of annual copper production and around 50,000 ounces of gold. So this project, Costa Fuego, that we've been building is now at that critical scale that it is very meaningful. We talk about a few things. One of those is meaningful, and the other is near term, and lastly, low risk. So the elevation, the fact that the ore bodies are old, they can be processed with salt water, as several of the coastal range deposits can be. We make up part of the crowd of around about 23% of copper production that comes out of Chile that is processed with salt water. We get a better recovery, and that has effectively skipped us about $1 billion. We don't have an expensive pipeline to build into the high Andes, and we don't have an expensive desalination water plant. So we have a project that can punch out a lot of metal, is very cheap to build, and is in a location that is not known for large capital blowouts and large timeframes to develop. So what we have here is really a platform and probably the perfect positioning to the underlying commodity price of copper. You can buy ETFs to get exposure. You can buy physical metal. How people are even ripping up copper wire around the world as copper approaches $10,000 per tonne, and we're probably going to see that only get worse. Scrap market will increase, but it is very hard to see where the copper sector delivers another 1 million tonnes of fine copper production per annum into supply, when Hot Chili is holding one of 6 projects that is capable of producing 100,000 tonnes of copper. And let me put that into context. 100,000 tonnes per annum of copper doesn't get you a seat at the big boy table in the copper sector. That is the 200,000 tonne mark. So if we have 6 projects outside of the majors that span 100 to 150,000 tonne per annum production profiles, I think we can all see the issue of achieving another Escondida or 1 million tonne per annum producer each year, especially given these very, very long lead time items with permitting. Just quickly on our capital structure, quite recently in the last month, we were able to bolster our treasury. We were very, very heavily supported in May in a period of about 5 weeks where the equity markets saw some sunshine, and Hot Chili's timing was impeccable on that front. We had a growing amount of interest in the company from strategics, and certainly a number of options were opening up to the company, but we were very, very focused on where our valuation of our assets are at the moment versus where we believe they should be. And that's not a personal opinion, that's just looking at the market and saying, where are the average valuations in the North American market where all of these large-scale copper equities exist? And that is not the valuation range that the Australian market trades at. It wasn't in the last cycle, it isn't in this cycle. It's an arbitrage effect that we're very well aware of, and why we are migrating our liquidity slowly over towards the North American market. This was one of the reasons why Equinox left the Australian market in the last cycle, being valued at $45 million by the Australians with a 1.3 billion tonne asset, was clearly something that the North American market appreciated, assisted in funding the build of Lumwana, and eventually Barrick taking it over for over $8 billion. Now we sit in a vacuum on the Australian market. For a brief period, we were the only copper equity that had a project capable of producing 100,000 tonnes per annum of copper in the exploration, development, and indeed in the production space. Capstone Mining has moved to fill that void with the dual listing now, and unfortunately Australia lost its only significant copper producer in the plus 100,000 tonne club, which was Oz Minerals. And that is really the void that Hot Chili is looking to fill. We're very proud to be an Australian developer, and proud to have been able to take this large step of a long time frame to build one of these things, but we very much well know what an asset like this looks like in production and what the value looks like. So we certainly aren't looking to transact at the company level, at the asset level, at these valuations. So protecting that and protecting our ability to control this asset is first and foremost. $30 million raising, 25 of that in a private placement, 90% supported by institutional investors, done in less than 24 hours, and a share purchase plan that was closed in half the time. Market given 6 hours notice, and another $6 million came in. So it's fair to say that, that we are recognised for what we represent to the commodity price of copper. And so with that, we see a growing institutional side of our register and a growing push into North America. Another 13 fund names from Canada and the US joining the register. Just really quickly, what has given us this opportunity to be so near term? It's funny to stand up here as a CEO and talk about, you know, that this is the nearest term 100,000 tonne copper development story in the globe outside of a major, and to talk about a production ambition first production of 2028. That doesn't sound like such a near-term proposition, but this is the issue with the copper sector. All of our peers are behind that time frame. In fact, their time frames are quite questionable when you look at the actual permitting that each of these projects has been able to secure. And really, this is the power in this story, and this is because Hot Chili has done all of that hard work. There's no shortcut to this process. Permitting timeframes are very long, and they need to be long because building mines is about partnering with the government, partnering with the communities, and all of the stakeholders that actually need to come along and be invested in these things to create jobs, to create intergenerational equity distribution to the populations in which we operate. And so permitting is absolutely key. It's what's holding back new mine developments around the world. So over this plus-decade effort to permit Costa Fuego, to secure easement corridors, to build water pipelines, transmission power lines, getting the last terminal connection to the central grid, all of your surface rights in place, and water. Water, which is absolutely key, and it's been said by my chairman, no water, no project, but we might add to that, no project, no water, and you need to think about that, and that's the partnership opportunity here. Mines like this don't get built, water supply doesn't get built, and water supply is key to sharing that benefit to the local community. So what we have is an 8-year process to secure a maritime concession to take water from the ocean. We have a project that requires seawater for processing. We're very lucky to have that. It's made the project cheap. Another 2 years to secure the actual land on the coastline to extract water from the Chilean Navy. And Hot Chili sitting here is one of the only companies that's actually gone through that process, and we well know the process. And we know the timeframes that are involved, and we know that even if the government wanted to streamline these things, there's a significant amount of that timeframe that is immovable. And so that then starts to create very, very strategic value around these assets and these permits and these licenses. And water is absolutely critical to not only enabling this project to be built, and enabling potential other projects to be built around us, but it's actually a secret weapon that Hot Chili has developed. We didn't do it intentionally. We just made a very good decision over 12 years ago to pursue our own maritime concessions for this project, and now that has us in a position with a very, very powerful funding optionality in terms of how is a little junior going to build a $1 billion project. One of the questions that should be at the forefront of every investor's mind when investing in the junior natural resource sector. So outside of water, outside of all of these permits and these long time frames, infrastructure and existing infrastructure is also key as to how you make these projects really hum, how you make them low cost. And the decisions of Hot Chili have not been short term. Some of the decisions and some of the deals that we have done have taken literally 5, 6, 7 years to consummate. This port services agreement that we secured a few months ago, that was off the back of 4 years of discussion. We were offered port services to this existing berth sitting right next to our project, a very unique situation also. And that was great. But what we are looking to do is build a bulk business that spans generations, and bulk businesses need bulk terminals. And so the announcement to study a bulk terminal option for a port that was built and not really used is really key to this story. It means that we can put our concentrate on trucks from mine gate straight to port and have our concentrate being loaded into a vessel within an hour. That's pretty unique. And so we're a joint study partner. We're first in line with a ROFR on that port study, and that is going to be very critical in terms of how we get our product to the seaborne market. I'll talk about some of the key areas of this presentation rather than going through on a slide-by-slide basis, because I also want to open this up to some questions from the audience. Most people know that the resources is large. There's not really a lot to say after you've invested $220 million. It's 85% indicated, and this is locked down, ready for first reserves. We've squeezed most of the juice out of these two assets. Most of our growth sits out of the two large assets in Costa Fuego and Cortadera. We're over 1 billion tonnes. We're 800 million tonnes indicated, and 70% of these deposits will be coming out of the ground with an open pit. There is a cave that is being studied into this project at the back end of the mine life. Ultimately, whether this deposit, Cortadera, is exploited with a cave or an underground is really a feature of the copper price, as you can see there with the optimisations. At this point in time, this is more profitable and more efficient to extract the bottom of Cortadera in a cave. But I imagine where this copper price environment is going, you don't need a lot of imagination to see an extremely large pit opening up on Cortadera. And what that does is a few things. It does lower the grade of head grade because we can take everything. But it instantly turns 16 years into plus 20 years on mine life, just because we can take it out in an open pit at a higher cut-off grade. We always optimise our mine plans at 20% lower than our financial price. We have room, but I imagine that the forthcoming copper price increases over the coming years will give us even further room. So very well established in the top 20 undeveloped resources of the world, so this is very significant. There's not many of them at that end of the table that are in the low-risk basket as rated by S&P. And very much, this is not a grade story. We are in part of the copper sector, which the North American market very well understands, comes out of the ground at around 0.5%, and in the future will come out of the ground at around 0.4%. And so on and so forth, as the world gets ever more hungry for the red metal. And so this story is about economy of scale, is about infrastructure, and is about low risk optionality. So not being up in the Andes is really key to delivering these financials. We talked about these last year, very low strip ratio on our open pits, fed by low operating costs by not being in the Andes, and more importantly, a $1 billion price tag for something that delivers 100,000 tonnes of copper is virtually unheard of in this industry. And it actually elicits a response in many of my meetings to say, are you sure that your engineers have got this right? Because that capital intensity doesn't exist with other projects. That should be a $2 to $2.2 billion project on average capital intensity metrics. And it is really as simple as two components: no desal plant and no high-end and pipeline. And that is a capital burden that all of my peers have to bear that this project doesn't. And it is about $1 billion in total capital saving. So this is what we're here for. This is what 16 years of my life has made a bet on, that we can make it to the next copper cycle, and when we get there, we'll have the right product at the right size to actually offer true leverage. And leverage is a really simple thing to understand. If you have one of something and the price multiplies by 10 as it did for iron ore or lithium, then you have a 10 times return. If you invest in something that has 10 and it multiplies by 10, I don't think you have to be a huge mathematician to get the formula right. And that is what Andrew Forrest did with FMG. And that is what the big lithium stocks did. And they were the boats that floated the highest. Okay, so then when you're trying to position sectorally, and if you've chosen copper, then you need to be choosing the projects that offer you the largest leverage. And this is certainly one of those projects. Every 10 cents a pound above $3.85, an extra $100 million of net profit after tax. And you'll notice that I state after tax. A lot of CEOs want to talk about pre-tax. Everybody has to pay tax. So let's just be realistic when we talk about numbers. in any of these presentations. So what does $4.60 equal? It's really easy. It's another $750 million US on this profitability that we put out a year ago, putting the NPV after tax today at about 1.85 billion US. So very leveraged to copper price, very low capital intensity that is unrivaled amongst our peer group, driven by the fact that we are down below the Andean snow line on the coast next to port, and we're one of the only projects that has actually secured a maritime concession so that we have water supply. And that's really important because most of these projects are located in the same location where I am. And that's the Atacama. It's the most stressed region for water in the world. Water scarcity is the issue that is holding back a lot of copper supply. And so it's unique for a company like us to be holding a water solution in the first place. And then it's also something that you look at the peers, and I guess they have their own timelines to development, but if it took Hot Chili 10 years to secure a maritime application, and a lot of these projects don't actually have their applications in, then you actually have to ask a few questions about how they can build a mine in that time frame without water. So that's something that I think that Hot Chili has shed light on. Perhaps some of my peers are not very happy that I've done that, but that is the reality of what is going to be key issues to why copper can't respond to new demand. This is really just about metrics, and again, I wouldn't be a good CEO if I didn't show you a graph that said I'm so undervalued. But in this case, we are undervalued. The equity market is undervaluing most companies. Never be myopic about your share price performance. I get a lot of questions from shareholders, why isn't the share price responding? The copper price has gone from $3.60, it's at $5.20, now it's $4.30, back to $4.60. Why isn't the graph of Hot Chili's share price moving 1-to-1? And you kind of, bring up these graphs of every other copper equity, and what you find is that we're actually performing pretty well. We were second best performer on the TSX over the last 2 years for share price performance, and on the ASX. So there are two companies performing better than Hot Chili. So the issue is why aren't the copper equities moving? And so you can either think that something's wrong and think that maybe this is a false start. Directors have jumped in too early before, and maybe getting your timing right is always about the center of anyone's investment thesis. You want to buy at the lowest point, you want to sell at the highest point. And so you've got a huge amount of very educated money that is now starting to take bets on copper. It's happening in the futures market. It's the reason why short squeezes are occurring, and copper prices are quite volatile at the moment. But this will transfer into the equity markets. If you don't think it will, then you would not have believed what happened with lithium, and you certainly wouldn't have believed what would have happened with iron ore. I was a young geologist up in the Pilbara working on a gold project, really just shaking my head at the geologists that had to sit on the same planes as me going up to the big iron ore mines in the Pilbara of Western Australia when iron ore was $20 a tonne, and I think road base for building roads was around $23 a tonne at the time. And you sort of felt sorry for your colleagues that left university and joined that industry until the price moved, and that reset everything. And it also reset the largest 10 companies in the world to include a few iron ore Kaisers. So we are trying to emulate a similar situation. Growth is going to be a continual focus for the company, with $35 million of treasury, half of it directed towards development, the other half is earmarked for growth. We don't talk a lot about our growth, and we don't certainly preface telling people when we're turning on drill rigs, getting excited about rock chips. We complete $500,000 geophysical programs that most juniors would be jumping up and down and showing you a red dot on the screen and promising you it's going to be the next mine. We don't tend to do that. Our journey's been long, and the materiality of that type of news flow is being quite diminished for the company. But what we are doing in the background is a huge amount of work with our geological team. They're setting up the next generation of drill targets. Drill rigs are operating, and targets such as exciting things right next to the Productora deposit that we're outlining here have been on our list of things to do for quite some time. But now we're about to lock down mine footprints, where ROM pads are going, where infrastructure and processing facilities are going, and we probably need to close these things out. A big part of our exploration efforts are really about taking forward advanced opportunities. I've been in the exploration business for over 25 years, as Kerry said. I started my career in gold. I was very fortunate to get very lucky at the beginning of my career. I walked out of a town in Mount Magnet with about 8 discoveries under my belt, of which 7 turned into open pits. Like all good young geologists that get really caught up in it and don't go home for 10 weeks at a time, and managing directors try to literally pry you out of the site because you're having so much fun with 6 drill rigs being towed behind you, drilling everything that will move. And they wondered why I got successful, because they gave me too much budget, and perhaps mixed that up with talent. But something I learnt in the exploration industry from that point, I'm not a fan of romantic exploration. I love a good idea. My former CEO and boss and mentor, Peter Cook, he said to me, "Christian, you can't put pretty pictures through mills." And it's resounded, it's something that's resonated to me my whole career. We go after things that other people have already found, and they just haven't recognised what they are yet. In the case of Chile, it's a fantastic opportunity when you find an area with 4 big porphyry mines, all being exploited for copper oxide, and the Chilean industry doesn't really believe in drilling. It's a waste of money. If you can see it, you mine it. So you find these opportunities, and then it's about the challenge of consolidating them, about doing deals with the families that own these things. And when you can get your hands on them, you have outcomes like Productora, like Cortadera, and certainly like the next generation of assets that we are after. So this is the last of the tidy up of Costa Fuego. It's been 16 years, and we've got our eyes on the last assets. So our growth and stretch targets to thinking that this production hub could grow to 150,000 tonnes, that's not just, I guess, some geologists sitting in a room throwing darts at a board and pretending they know what the outcome is going to be. We put a lot of effort into the things that we target and acquire, and I imagine that the market is going to see more news flow in relation to that consolidation strategy and then very targeted deployment of drilling budget. ESG, this is something we don't talk about enough. Jose Ignacio, our Vice President I mentioned at the beginning of this presentation, has really been driving this on the ground. We're extremely proud of what we have done in the local communities of Vallenar and Huasco, from the support of 2 of the key orphanages in the valley now for I think 12 years of support, and seeing some of the children actually graduating and then going on to university is something that we're really proud of. Another program that Hot Chili is heavily invested in is bringing mental health services to the regional areas in which we operate. That program has only expanded, has won Hot Chili a number of awards and recognition from the local to the federal government, and something that Jose Ignacio has been a key driver of. But that is that social partnering that Hot Chili is involved in. We don't just have a very, very green project that we can run on renewables, that we don't have, high energy intensity. We don't have a sprawling footprint. This is all compact within existing infrastructure. So if you can bring the community online, and you can actually be a genuine corporate citizen and sit down from the outset and bring them with you, then that's how you're going to build a mine. There will always be people that are opposed, but what we need to do is work with any opposition to this project and try to mitigate or try to address any of the concerns and do it from the outset. It is expensive, it is time consuming, and it's something that you can never take your eye off of. But if you get it right, then you have the most fantastic workforce that will defend a mine and defend jobs for an area, and that's what our approach has been on ESG. What will now be an even bigger aspect to this ESG approach is the provision of water to the Huasco region, to the communities in which we operate, for the benefit of agriculture, for the benefit of water supply to the people, and for the benefit of jobs that mines such as Costa Fuego will create when that tap is turned on, allowing us to process using salt water. A concept study that we put out earlier in the year when we really wanted to understand the strategic value of these water assets, that concept study identified a very, very large demand base from undeveloped projects around us. Some very, very big names there, I might add. And when we actually took the time over 9 months to study in detail the Chilean regulatory system, every application that is in the system, every existing license that is granted, every license that was previously applied for and was dropped or is redundant, it gave us a very good picture, and that really shocked us. That probably told us that we were in a much stronger position than we had realised. And what we now confirm is that we have the only maritime concession in this entire region. Water supply in the Atacama is key to unlocking those developments. If any of those developments were to want to participate in this copper cycle at the moment, they could make their application so that they could supply seawater into the high Andes, obviously with a desalination finish on that, because most of these are the young deposits up in the high Andes. But that's 10 to 12 years away. And they won't be participating in this cycle, not with the current regulatory timeframes involved in securing water rights. And so what that really does is put Hot Chili in an extremely unique position to investigate not just supplying water to our project, but being able to actually enable other projects to be developed by providing water. And that is something that the government's been pushing. Multi-user water networks are the new future of water supply within the Atacama region. You are not allowed to take water from the continent anymore. The protection of continental water is absolutely key for companies getting their social licenses to build new mines and to continue operating existing mines. And so this is something that Hot Chili is not really, I guess, the only company thinking of doing. We're just the only company that can do it because of our permits. And so that is what we've now split into a new company called Huasco Water that we announced on Monday, a new subsidiary that has been created underneath Hot Chili, honouring the existing ownership of those water assets that were in our operating subsidiary, partnered with our iron ore mining company, CMP, our partner in Chile. So that 80-20 joint venture has been established into this new company where we control 80%, where we are a foundation off-taker to Huasco Water for 700 litres a second of seawater supply, and where our partners, CMP, also require water, but in the form of desalinated water, and 200 litres per second for their Los Colorados expansion, their iron ore mine just to the north of INR. So that now gives us the opportunity to effectively monetize Huasco Water for the benefit of building our copper mine. We have an 80% interest. The outsourcing of industrial infrastructure is a growing trend in Chile. In the announcement that we made, we pointed to a transaction that just happened a month ago where Antofagasta sold its water rights and its water assets for the expansion of its Centinela mine. Again, another mine that is operated on salt water. And a consortium of Transelec and Armar Water bought those assets off of Antofagasta for $600 million, and that gives them the right to spend another $380 million building the upgrade for Centinela. But what Antofagasta provides is a long-term offtake agreement to Transelec and Armar. But that's about $1 billion value accretion that was realised from Antofagasta from their water assets. So that is very similar to the way that we are thinking about this. There are other options to hot chili. Spin-outs have been discussed and nothing is being ruled out at this stage. But when people say, but these are just water licenses, these are just accesses on the coast, how could they be worth any money? You need to look at transactions, you need to start to understand a different industry type, because hot chili is spending time to understand that industry type, and the more that we understand it, we see perpetuity businesses, 50-year water licenses, revenue streams that are greater than what our copper project puts out on our PEA numbers last year. Our PEA put out $850 million US of annual revenue generation at $3.85. It will be a lot more at higher copper prices, but currently Huasco Water, conceptually, at a scale of 4,000 litres per second on the ultimate scale of what we're looking at here, has much larger annual revenue generation capacity than our copper project. So yes, these things are worth a lot of money. And most juniors spend an inordinate amount of time, their CEOs, trying to explain how they're not going to dilute to oblivion their shareholders when they try to build billion-dollar mines and start looking for the equity component, which is often multiples of the market capitalisation of that junior company. What you're looking at is the opportunity that we are pursuing to provide that solution to financing. And the timeframes that we're advancing this are in parallel to the timeframes we're developing Costa Fuego. We aim to have a pre-feasibility complete on our business case study for Huasco Water towards the end of this year in parallel with our pre-feasibility on our copper project, and both will be dovetailed towards project financing solution for all of this infrastructure. So our next steps are really starting to get set in cement. Some shareholders say it's really unclear what your strategy is, Christian. You know, why don't you tell us every 2 weeks what you're doing and what's your strategy? And look, my answer is, you just need to go to our corporate presentation or go to every release that we make. It has not changed. We are on track to deliver our pre-feasibility at the end of this year. We're on track to submit our environmental impact assessment mid-next year. And we are on track to project finance this at the end of 2026. So 2-year time frame being on the coastline, maybe it could be 18 months, but we're also not in the business of over-promising something. We have fat in this schedule for that reason. We aim to be in production at late 28. And that, again, I come back to this, that might sound like a long time, but show me any other peer in our space with a project of this scale that has a shorter time frame. And that's really your choice if you're looking at investment opportunities in copper. I think I'll finish there, Kerry, and maybe move to some questions and answers. I probably bored everyone long enough.
No, excellent presentation. Thank you, Christian. Questions? Yes, I knew there would be some. I'll give you first.
Okay. On one of the slides, it was item number 5, you were talking about Glencore, and they have the right to 60% of, what was it, of buying it for 8 years. They got to maintain 7.5. Can you go into that?
Yeah, so Glencore is our largest shareholder. They have about 7.5% of the stock at the moment. They invested in us almost 3 years ago now with a 9.9% position. At the time, they didn't receive any off-take rights to the company, which was a very unique transaction when we did it. I don't know of any other transaction where Glencore has invested a strategic stake in a company and not walked away with 100% of the offtake for life of mine. It is part of their business model. They're the largest trading group in the world. They're a much larger miner, obviously, and they handle 52% of the global copper concentrate book. So that is a very, very strong offtake partner to have, and it de-risks where our sales are going to come from. But it is certainly something that is not as attractive as holding a portion of your offtake and having the flexibility of that for finance. So 6 months after their investment, we did sign an offtake agreement with them. It was unique, like you say, it was just on 60% of our offtake. And why 60%? Probably the question, at that time. And I'd have to probably check with my friends at CRU and Wood Mac. But at that time, around 56% of the global copper concentrates were being sold at benchmark terms. And so that 60% of offtake was representative of the component that is sold at benchmark terms. And that is the transaction that we did with Glencore. So very transparent pricing that is determined every year between the largest producers and largest suppliers. So we were very, very interested in having the largest offtaker for that component of our sales. But we were more interested in keeping all of our spot offtake in place. And that has turned out to be a very, very good decision by the company to dig our heels in about that. And so what that has meant is that now we find ourselves in a market that is literally devoid of concentrate surplus, and all of the offtakers are fighting very heavily for that offtake. TCRCs have dropped to 0. Long terms just went 25 and 2.5. A year ago, this was 85 and 8.5. This is 17% of your operating costs. The sales component. Most of us in the mining industry don't realise that there's a whole adjunct industry that attaches to metals, and it's the offtake industry. It's the point of sale of your product, and they take about 17% fee on the way through. And so for those fees to be at that level means that concentrates are very sought after, particularly concentrates that are clean. So to have virtually no arsenic in our concentrate, obviously that attracted Glencore's investment, and to have a near-term production base of 2028. Yes, I've been in Japan and Korea a fair bit this year, and there's a huge amount of interest for that offtake, and that provides funding optionality for Hot Chili. And the second aspect to the Glencore transaction, why they hold 7.5%, that is the minimum holding that Glencore has to hold. So it means that they're a lead order going forward in financings, and if they aren't holding 7.5%, then they don't have a director on our board, and they lose those offtake rights. And those offtake rights are very, very valuable. So much so that nearly every offtaker we have a meeting with says, is all of the remaining offtake available in one transaction, Christian? That additional 160,000 tonnes, could we take the whole parcel? So books in 2028 on these offtakers are looking a little bit skinny. That's what I can tell you firsthand. And it's very lucky that Hot Chili retained those offtake rights in that transaction with Glencore. But we have a very close relationship with Glencore, very constructive, and they're very much assisting us on the development studies for Costa Fuego.
With all the concerns these days about resource nationalism, what's the political situation like in Chile, or what other, can you speak to any political concerns there?
Thank you. Look, nationalism, Chile, nationalism anywhere. It's hard when I get questions, and sometimes you have an emotional response to them. When you've been living in Chile and working in Chile for 16 years, it becomes a second home. You become very, very familiar with the countries in which we operate. Look, it's most people know it's a Tier 1 jurisdiction. It's got to be the friendliest investment jurisdiction for North American money. It's a country that is, in any given year, either third or fourth on the Fraser for mining countries, very stable politically. It went through recently a bit of a test of character with the constitutional process, a change to a president that was a little further left-leaning than previous left presidents, and that certainly, put a question mark over, whether Chile would go off the rails, not behave like a Canada or an Australia, and I'm glad that that Chile passed that test. The population came out in droves, one of the most heavily voted on, I think, elections and referendums on the constitutional changes, and every constitutional change was rejected by almost, I believe it was about 66% in the end, in every state of Chile. So I think that that's really positive for Chile. These questions of tax take, they come up, and they come up on a cyclical basis. And the last time we had this really hit the industry, it originated in Australia. And I'm Australian, and I spent most of my life in Australia. I was born in the US, came to Australia when I was 7. And so I get emotional about Australia also. And, when that happened in Australia and the left government, Labor government, put that super profit tax proposal to the Australian people, they were subsequently defeated in an election because of it. But no one thought it could happen in Australia, and they certainly didn't think it could spread to Canada. So, I think that question is really relevant to any country, and CEOs shouldn't stand up, get emotional, and say, no, never in my country, because realistically, nationalism can happen anywhere. But I think that Chile is a pretty safe bet.
Okay, we're running out of time. We'll take 2 more questions. One piece.
And before my question, I would like to quickly thank you for using 8% discount factor by the NPV calculation. I see too many companies, even here, using 5%. And so, what is currently priced in and what is still missing? What do you think?
Oh, I wouldn't be a CEO if I didn't say that 99% wasn't priced in. But realistically, look, the market, is a really a barometer that measures your success on a second basis, on a minute basis, every day, every month, every year, and markets get it right, markets get it wrong. At some point, they might sit in line with what your view of value is. But ultimately, the market is always right. So you're either overvalued or you're undervalued. It's a lot better to be in a situation where you're undervalued, because there's a lot of things that keep me up at night, and mostly about how I'm going to get the share price higher, how I'm going to get the value that I don't believe sits in the pricing, that we're showing the potential for a standalone water business, and it's clearly not priced in, that we're showing a project that is trading at a multiple of almost 3 below our North American peers, and that arbitrage effect, obviously that's something I talk about a lot because it's very easy to speak to. Every metric shows it. We're cheap on metal, we're cheap on PNAV, we use consistent discount rates, we use conservative long-term pricing. We don't step out of balance and start putting our own views on the inputs into these things to demonstrate value. We always go with 27 bank consensus. So we have a conservative view, in our opinion, of value. A lot of it's not in the stock, and so that's why I come to conferences like this, and that's why we spend about 2% of our dollar on marketing and trying to get more exposure for the company. A lot of Hot Chili's issue is that we've been around since 2010. We were a darling of the market in the last cycle. We made a discovery on the coastline when copper price was $4 a pound, and the company went very, very well and made a lot of money for a lot of people. And then we had to endure a downturn that wiped out nearly all of our peers. And so, you almost feel that you're punished for surviving, for being one of the few that survived. And people say, but what happened? Was it the grade? Was it the size? People just didn't like it. You know what happened? The copper price dropped to $2 and registered the economics 0. That's what happened. And so, I think that the market reflected the value of copper equities really well. But then it's the fortitude of the management company teams to actually hold on to the assets, to not destroy them, to not drop them and hand them to another leaseholder for $100,000, become a tech company because that's where the hot money is. No, we actually sat down and worked through how we were going to dig ourselves out of a deep hole that we hadn't put ourselves in. And when you sort of start to turn on survival instinct, well, how are we going to make this even better? Even with $2 or $2.50, we've got to make this project work. We put a lot of our lives into it, and we put a lot of shareholder capital into it. And because of that, that's why we sit with 1 billion tonnes. That's why we aggressively pursue deals that change the fortunes for our shareholders. But, to your question, which was, what don't you think is priced in? I think a lot isn't priced in. I think that if we were trading in line with our North American peers, you'd be looking at a market cap of around $450 million. And that's really any metric you want to use. Some of them are in our presentations, but you can pull them out of broker reports and verify everything that we've done because they're the same market metrics that are used.
Still lots of questions. This is going to be our last question, so if you want to ask any more questions, please go and see Christian afterwards, but last question.
Thanks. Hi, Christian. Good to see an entrepreneur in a geologist body. You're doing a great job, man. I think it's a fantastic project. We're seeing the acquisition cycle take place, mergers and acquisitions. We're seeing Antofagasta, making hostile bids on through the back door. We had a Rex sale, the first sale of a developer this week in Australia. I know your intention is to go all the way. How can you put a bit of meat around what's happening? Are you getting knocks on the door for takeovers, things like that?
Yeah, thanks, Scott, and great to have you over here. You made a long trip from Australia, one of our very supportive shareholders, so great to see you again, Scott. Yeah, look, we discussed in the capital raising very carefully, and every company has to be extremely careful with what they say, and CEOs have to be even more careful. We are constantly engaging with our peer space, with other corporates. It would be incredulous to think that Hot Chili is not getting attention with an asset like this at this time in the market. So yes, Scott, I can confirm we do see continuing interest in the company. We have open dialogue with several corporates that have interest in what we're doing and keeping up with things and knowing exactly where we are and what we've solved and how we're de-risking particular questions that they might have. And more recently, that interest, was getting quite loud, and it had a lot to do with the decision by the company to trigger an equity raising at a timing that was opportune for the company to bolster its treasury. That's put us in a unique position that we can determine our own outcome without being forced to make decisions that might short-term put smiles on our faces and shareholders' faces for a quick sugar hit, but might ultimately significantly detract from the value proposition that is coming over the next 12, 24 months in the copper sector. You talked about some recent transactions. I bet the guys at Rex, and look, Rex have been developing Hillside alongside. I think they started a few years before me. They've been one of the names in Australia developing their Hillside asset, and I think they just elicited a 79% premium offer, trading at 27 and getting a 47 cent full cash offer this week. Means that Australia had 4 meaningful sized copper developers. Now we have 3. because I imagine that that will be taken up. So look, you can't ever ward off interest. You know, we intend to generate value for our shareholders the best way we know how, and you can't rule out or dissuade interest. So things such as the 7.5% clause with Glencore, meaning that, you know, if you're ever in the guise of, or, you know, in the gaze of M&A, that whoever gets to 90% control in Hot Chili in a takeover situation ultimately removes the offtake. So things like that in those deals, we did those to ensure that competitiveness around the company remains, that we're not discounted because we haven't done something silly, that we haven't sold a minority interest in the company that has supermajority positions that impact your attractiveness in a takeover situation. So we are certainly open to all of that aspect of generating value, but you know, we see two paths. There's always the short path that is a shorter return for generating value for your shareholders, and it might be paved and you might have to drive a small little hatchback along that and you'll get there pretty quickly. And then there's a much bigger pot of gold on a pretty rough road that's got potholes in it, and I think that, you know, what you're investing in with Hot Chili is a four-wheel drive.
All right, Christian, I've just been given the wind-up notice from Michelle at the back here. So, ladies and gentlemen, please thank Christian Easterday from Hot Chili.
Thank you.